Morning, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Stop newsletters and help founders with their pitch decks and talking points. No founder knows how to write a pitch deck properly, and I know because I'm working on two right now and just finished one last week. And I make introductions to strategic partners, clients, or potential clients, and investors where and when appropriate. And I'll put the link to sign up for our newsletter in the chat. We host these every 2 weeks with a different guest each time. And welcome, Glenn and Joe. Once again, but first, I'm going to have Joseph introduce himself.
Thank you, Bonnie. Welcome, everyone. Good morning. Joseph Katz. Startup marketing guy. I help startups go from unknown to well-known using go-to-market strategies and plans. I'll put all my information in the chat because we're going to keep intros short so we can get through some great information today.
Yes, we'll go quickly through the room, and then we'll start our masterclass on startup basics. Eric, take it away.
Hi, I'm Eric Becker. I'm the founder and CEO of Milam, and we've developed a behavioral intelligence platform that provides corporations with a signal or a radar or predictability when it comes to alignment, engagement, and risk for human capital. Thank you.
Thank you. Henrik.
Yes, good morning. My name is Henrik Leborg. I'm a fractional CFO out of Toronto, Canada. So I help startups and scale-ups, mostly in the tech field, but also in other fields with their finances. Thanks.
Thank you. Yes, Alex, I'm going to have you introduce yourself.
Hey there, Alec Bogus. I am Joe's colleague at AngelSpan. Happy to be here.
And we're always happy to see you. Catherine. You're muted, Catherine.
Hi, Catherine Branscombe. I run a international distribution company specializing in kids and family in media, and we're crossing over and starting to build out brands. So 360, all touch points for kids and family content.
Oh, thank you. Chaz.
Hi, I'm Chaz Walker. I'm an acolyte and believer in the legacy fund and AngelSpan model, and investor and advisor to startups, always looking at new opportunities. Pleasure.
Yeah, I have to invite you to come speak at my Online Insights. John, I will.
Good morning. I'm John Kaler. I am the CEO of, excuse me, it's early and it's allergy season.
Yes.
Sine, we are a startup that's ready almost to start fundraising. Yay, finally. Offering a online, wow, brain freeze. Offering an online way for folks at events and activities to upload video, which they normally are shooting anyway, and have us create through AI video clips and highlight reels.
I completely understand, John. I was told that this is one of the worst allergy season on record, and yes, I had that brain fog.
Oh, yes, I've already taken 3 allergy pills and a shot this morning.
Yeah.
Thank you.
Michael. Oh, Michael?
Ah, Michael Daly.
There we go.
Hi, Bonnie. Thanks for hosting Joe and this crew. I am a CPA 30 years. 8 years ago, got into this ultra high net worth crowd, got acquainted with company founders and company funders. Ratios worse than 20 to 1, of course, maybe 100 to 1, but excited to hear what y'all have to offer in the market. And I confess,
we are trying to keep them short because there are a lot of slides.
Go for it.
Okay,
I will hold my tongue. Thank you.
No. Patrick, always good to see you. Welcome.
Hi, good to see everyone. Sorry I had trouble connecting there. I don't know what's going on with Zoom. Yeah, so I'm Patrick Fraley. I'm based in New York City, lower middle market investment maker. Love working with founders. We're primarily focused in the fund admin space, so fintech and healthcare, and do a lot of sell-side M&A.
And thank you. Scott.
Good morning. Scott Purdy with Sine, one of the founders, along with our CEO, John Kaler, who spoke a little bit earlier. I'm also a part-time actor. I live in South Jersey, and I love listening to these Joe and Glenn present. So I'm looking forward to it.
And Joe, thank you for the heads up for allergy sufferers. I'm going to order it.
Folks, I can't recommend it strong enough. It's a natural product. My daughter turned me on to this. We've got cedar fever here in Austin and Texas, and it knocked it out in a day.
Oh, thank you.
I'm telling you, just don't overthink it. Just go order it, take it.
I'm going to. Zarin.
On mute.
Yeah, you're on mute. Sometimes she's unable to talk. We'll come back. So, thank you, Glenn and Joe. Do we want to start our masterclass? You want to give a little bit about your backgrounds, and then we'll start our masterclass on startup basics.
Yeah, sure. I think most people here have
Yeah.
met us all before, probably. This just to give a little background, I was a long-time startup founder for 30 years before I ever went into venture, basically. Actually, I could do like a lot of founders and go all the way back to high school. I had my first invention that I sold to Stride Right Shoe Company happened while I was still in high school. But really, my professional career dated back about 30 years. I did 14 startups with 9 exits and 3 public listings in that period of time, and then went into venture. So I've always, Joe kind of laughs and jokes. We talk about being reluctant venture capitalists, right? I'm basically a startup founder at heart, and this is basically a lecture series. It's a very small piece of a lecture series that I've done at a number of universities on entrepreneurship and startup, basically how to go about building a startup. We're going to try and cover what we can today. We cut this thing down from a ridiculous size, and we're going to cover what we can today. And it's going to be a little disjointed because in order to do this, I had to just randomly throw out concepts. And then Bonnie and Joe are going to come in and out. They've got tremendous core expertise that just take this to another level. So we'll see how this goes, but there's a lot to cover. It's basically founding principles, guiding principles, best practices. It's really designed for founders, so apologies if that's not of interest to you. I think even if you're somebody who works with founders, you should find some value in here, just because it's sort of like being a therapist or let's say a guidance counselor to kids in high school. You need to know the issues that those kids are dealing with, and this would be a good example of thinking about it. So that's a very high level. Dive in, and then Bonnie and Joe, if you guys just want, they know who you are, but sort of similar, if you guys want to say anything as we hit the sections or whatever, or did you want to do intros real quick? Your call.
Oh, Joe, introduce yourself. I know everybody knows you anyway.
Yeah, so most of you do know me. This is what I think where Glenn and I have such fun is he's obviously got unbelievable pedigree from the entrepreneurial side, which I think contextually is bottom up, building entrepreneurship. And my background is from I think of it as the top down. ran a multifamily office and was a securities analyst, and probably could have run a hedge fund in college if I knew what a hedge fund even was in college. So that's sort of my lens and my frame of reference, and I'm a compulsive researcher, and I happened to join a firm out in Silicon Valley at Sand Hill Road right when the internet took off. And as a compulsive researcher, I became fascinated with the venture industry and found all the inherent flaws in the investment process, how people invest in startups. And so that's what I've been working on off and on for over 20 years, is trying to bring more investment process rigor to how you invest in startups and support innovation, which 30 years ago was a cool little cottage area unique to America. Now it's become a necessary part of the global economy. And the fact is, America's lost its mojo in the venture world. It's gotten silly, and while entrepreneurship's exploded and become more professionalized through work like what Glenn is and what you're going to hear today. So we're trying to professionalize the investment side, and Glenn is professionalizing the entrepreneurial side.
So I've already introduced myself, and I want to say one thing, that when it comes to these lists of, the reasons why top 10, top 12, top 15, reasons why founders fail or why startups fail, nobody ever includes the most important reason that I found personally is that founders don't listen. So make sure you pay attention today. Listen, you're going to learn a lot. Glenn, take it away.
No, that's a good point, Bonnie. Just
Yep.
kind of jumping ahead a little bit. That ties right into flexibility. And we'll talk about that a little bit later, but there's a good reason that multi-founder teams do better than single founder teams. And we're going to talk about it. And part of that is having your notions, your ideas challenged, and having flexibility and moving off a mark. There can be risk to that as well. We'll also talk about. But so today we're going to talk about some very high level concepts. We're going to start off here with some kind of like must-haves or really basic things, just to kind of set the field. So I'm going to start with this isn't going to be easy no matter what. It's really this is a seminar or a lecture or whatever you want to call it, designed for founders who are maybe in their first iteration or second iteration. If you've already done 2 or 3 startups, a lot of this is probably going to be a little bit of old news for you, maybe through hard lessons. But for those of you that are in your first or second startup, you've already found out there's just no easy bypass. There's nothing I can do to simplify this completely. There's no hack to this system. That being said, like everything else in life, this is graded on a curve. And it is graded because there are people like me and other folks out there that invest capital in these deals. And we're looking at hundreds. In some cases, we look at over 1,000 deals a month. Quake has kind of moved off that mark, but we used to. And so we're seeing this incredible realm or range of quality, and we're weighing those things. So this is graded on a curve, and I'm going to try and give you some advantages for that curve. The next thing at a very high level, I would say, is a lot of founders, as we deal with founders and talk to founders on a regular basis, Bonnie, Joe, and I all do this. We talk to, I don't know how many a month, hundreds. I certainly talk to hundreds a month myself. Most founders at some point or another are dealing with imposter syndrome. Now, there's some question whether this is real. Even the people who developed the theory or have put some uncertainty in the market as to whether it's real or not. But I can tell you that it's a real phenomena for the people who are in the trenches. Founders are constantly looking around at all these incredibly capable people, and they're wondering whether they're the only person in the room who's playing a role. And I would say that, playing a part, I always joke, don't play the part of the CEO in the school play. But that's more about being authentic. I think a lot of founders are questioning whether they have the chops to do this at all times. Just know that you're not unique in that. I don't think I've ever met a founder. I really don't. I even those with incredible accomplishments who at some point haven't run into a little bit of that imposter syndrome problem. So just know, as you're in situations in a room, if you get funded by a large fund with a lot of high profile teams in it, some of those teams are going to look like they've got a lot going on. They're going to have people from top rank corporate entities. They're still going through the same things you are. So don't get hung up on that. This is a great time. I mentioned that we're grading on a curve. This is actually a great time to build a startup. There's been a lot of FUD out there that the last 3 years, maybe from COVID forward, is a crappy time to do this. It's the exact opposite. There's a lot of reasons. First of all, funding is harder to get. But funding is never particularly difficult for a good deal. If you've got a good company, good startup, those deals get funded in any environment. I've never seen it not happen. I've been through 3 downturn recessions, whatever you want to call them, and I have done my best work in those situations. And one of the reasons is when things are hard and down, well, first of all, the weak fall apart during that period of time. So the noise declines dramatically. So a lot of the other founders that you're up against, they simply don't have the grit. It's not even about having the capability. They don't have the grit to hang in there. So they'll bail. Second problem is, and this is probably the biggest one, and Joe and I have talked about this a lot separately, The A round companies really, A's and B's really struggle in a down market. There's a whole ton of reasons for this. They've hired way too many people. They've taken on too much expense, but they've got a lot of burn and they have to lay it off. When they lay off that burn, there's a lot of really good talent in the market. Number one. Number two, they're moving really, really slow because those companies have become specialists. They long ago forgot how to be Renaissance. They no longer are able to wear 6 hats with one person. They brought in people who specialize in a specific thing. That means when they lay people off, they move really, really slow because they have a lot of things. They don't even know necessarily how to contact their own customers. So you'll find that a startup at a pre-seed and seed can move much faster than those companies. They can hire people. I just said a lot of them are specialists. We'll get into that later. You want to be careful about that. But they can hire people, really good talent that has dropped into the market that wasn't available before. And they'll be moving again at a faster pace. So there's a lot of good reasons why this is the time that you can really make a dent if you're going out.
Glenn,
yeah.
let me put a point in that, because again, this is what's so much fun with Glenn and I is having studied and the best work done on the very things that Glenn is talking about right now was done by Bill Gross, who was a professor at Caltech. He opened the first, what we'd call an accelerator called Idea Labs in Southern California back in the 90s, and studied entrepreneurial, the factors that define success or failure. And the number one thing is timing. Timing could be really good and FOMO, or it could be really bad. And what Glenn is talking about as far as the inertia is concerned is the larger you are, the more timing either is in you could be either early or late. Second is product market fit, which is where you're going to get a deep dive lesson on this. Third is execution broadly defined, which is also the content that we're going to be doing ham and egg on. And fourth is funding. Now, a lot of people have broken those 4 broad categories out into subcategories, 10, 15 reasons, but those are the ones. And timing is the most critical one. It's over 40% determining factor. And that's been verified by a number of other people as well. So timing can be your friend, but timing can also be your enemy. And therein lies, I think, and I've seen, and I've experienced it, you may have experienced it yourself, Glenn, that frustration of imposters like, Jesus Christ, is the timing good or bad? Well, you never know because nobody can predict the future. And therein lies the other part of the need to stay smaller and more nimble, more flexible in your thinking and your behavior and your actions. So anyway, go ahead. Sorry.
Yeah. And more, from speaking to that, Joe, the ones that I've missed on, the deals I failed on, I was early.
Yeah. Right.
And that's always been the joke. My timing, I'm routinely early. And being early is just as bad as being late. So.
I would argue it's even more painful because when somebody else,
because then you see later, you were so close. Yes, I could definitely relate to that. One other quick comment and just about optimism. I put a note here. It's funny, I should even have to put it in. And again, these are just high level. We're going to get into some more granular stuff, but some things that didn't naturally fit anywhere. Founders need to have an optimistic spirit. You have to. This stuff is, I talked about grit. This stuff is so hard, just getting through it. And it's also funny because people will try and, people in your orbit will ask how they can help, what they can do. And the reality is very little. I mean, at the end of the day, this really does fall on the founder's shoulders. Yes, you can hire, you can add, you can do these things, but there are certain aspects of this journey that are very much solo. And we'll talk about teams and we'll talk about co-founders and things like that. But you need to be optimistic. You can't raise funding. You can't engage people to join your vision and your journey. You can't hire. You can't get people to kind of come along with you unless there's an optimistic spirit there. So you have to have that. But I wanted to put that here because one of the risks of that is you have to also be honest. Okay. So you realistic. Can spend, realistic, Joe. Exactly. You can spend, and there's levels of that. You can spend hard for customers, a little less hard for partners, even less for employees. But less so, and somewhere in there, probably around the same area as employees, is capital investments. But the one place you can't spin is yourself. Okay. You have to go to every night when you're sitting in bed looking at the ceiling, you need to take a moment and be as honest as you possibly can with yourself. So optimistic front, brutal honesty in your internal self. That has to happen. Bonnie, was that your yeah? Did I
You're
see
muted,
you?
I'm
Bonnie.
sorry. I wanted to add two things because I've been working with founders forever, and it is really hard, and it is very important to have a support system. And I mean people who are supportive. There are a lot of founders who have people around them who really aren't supportive. And we had an investor who spoke, and it was Peter Shankman, and he said, if you can't change, because they can make your life very hard. He said, if you can't change the people around you, then change the people around you. And I always loved that one. And
That's a great line.
it's a great line. And another thing is, because I worked with a founder who was just heads down for Select, never took a break. I said, take a break, take the weekend off, go away, leave town, come back with fresh eyes. And it changed everything. Sometimes you really have to do that. I'm
Good
sorry.
point. Really good point. Hey, Joseph, I'm going to move on to experts. So do we have slides, or do we want to just go?
I have your slides, or if you want to share yours from your side, whatever you prefer.
Yeah, either way. I mean, probably just since you got the control, just go ahead and throw up the slides if you don't mind. I'm just going to keep rolling. So the next thing I want to talk about is experts, and I want to talk about being careful, because this is Bonnie, Joe, and me, and everybody else that you bump into, and a few people on this call as well. So experts, by and large, you have to be careful. Trust but verify, I would say. Okay. The experts really want to be helpful. They do. The challenge that they have is that, well, there's a few things, that they have only had a very small amount of time around your business. In contrast, you've spent hundreds, maybe more likely thousands of hours. Go down one slide, Joe, please. Maybe thousands of hours thinking about the problems, and they're going to meet you over lunch, and they have 15 minutes to 30 minutes to try and come provide some real value. So that's a real challenge. They're, as I put here, they're learning in real time. So just be careful about that. The other thing I would say is these are really complex systems. We were joking at the three of us, Bonnie, Joe, and I were joking a little bit. H.L. Mencken is a old essayist, political analyst who wrote some really good stuff in the turn of the century. Way back, he was talking about one of the things he talked about was complex systems, and he says for every complex problem, there's an answer that's clear, simple, and wrong. And that's startups in a nutshell. Every single system we look at, whether it's teams or whether it's culture or operations, doesn't really matter what you take. They're not a single complex problem. They're a complex problem surrounded by dozens of other complex problems. So a 15 to 20 minute meeting with somebody, they cannot possibly get to the root of all these things. So that's number one. Number two, your instincts. You have superpowers, and that's I'm going to spend today, try and get some of those out, at least 4 of them out today. So one superpower you have is your instincts. I kind of joke, the magic still exists for you. Okay. In many ways, I was a much better founder 30 years ago than I am today. And there's a very good reasons for this. Despite all the experience back then, I didn't really know what was possible. And now I have this box that I've put all of the realm of possible inside. And there's a real value in chasing things, basically seeing some, a moonshot. There's a real, not an investment moonshot. I mean, an actual moonshot. There's a real value in looking at something and thinking, my God, that's a crazy concept, right? But you charge at it and you will learn. You'll learn in the failure. Sometimes you'll actually succeed. And a lot of times you develop some derivative or alternative technology, product, feature, whatever, or learn something about your customers that you didn't know. So not understanding, it's not about thinking outside the box. It's not even knowing that a box exists. That's a superpower that may look like a weakness, but it's something you absolutely have over a much larger business. A much larger business won't do any of those things. So that's something I would say when you're talking to experts, they have this interesting thing called wisdom, which makes most of the stuff they say sound really, really smart. And it might be. And again, they're trying to be helpful. But you have this other thing, which is time on site, this purity of thought, this lack of being muddled or clouded by a lot of conflict or having tried and failed, and you just haven't been beat up about it. So there are a lot of times when experts can provide a value that you don't bring to the table, but you do need to weigh that against what you've already figured out, what you're getting from other input sources and so on. So just be very careful. And I say that up front in this because there's going to be a lot of expertise tossed out here.
And again,
I want to add something that actually
Go
Jean
on.
Salud said at one of our investor breakfasts, because people were talking about experts and this and that, and she just looked at the room and she said, the Wright brothers didn't have a pilot's license.
Right. Oh, that's wonderful. That's
That
brilliant.
was wonderful.
Well, and again, and I'm going to, at risk of sounding professorial, but that's probably never going to happen. This is more profound than people realize. I mean, it is inherently profound at so many levels. And again, I did it through the lens, and I learned this through the lens of the managing money, and trying to be good at that and studying. And there's large firms that I outperformed because they had this intellectual inertia. They had also other things that creep into what impacts their priorities and contribute to their wisdom. And you can study this if you look at disruption cycles. Clayton Christensen's work, he dissects this very topic as to why the current constituents can't innovate and why disruption comes from outsiders. It's the very construct of this concept, and it's really, really important to understand that disruption cycles come from people that aren't limited by all the things Glenn just touched on, and that's where innovation comes from inherently. So part of what I would also ask you is, in looking at what you're doing, is it really innovative? Is it just a small micro innovation to incrementally do something cheaper, a little bit faster, or a little bit better? There's degrees of what innovation actually is. So that's another introspection you have to go through, is to really understand, are you being innovative? If it is, it's going to be a longer slog, and it's going to be harder to find people that actually get what you're doing. If it's incremental, some of those experts can have some valuable input and insights.
Yeah, that's a really good point, Joe. There's a couple really good points in there. I would say, you mentioned one thing you said that it's sort of like good habits. I usually have a conversation after I do these presentations with founders. Somebody will come up to me and say, that's all pretty much common sense. And I say that, and I'll have 40, 50 in the room, maybe even more. And I'll say, yeah, but none of you are going to do it. And I'll put an example to it. We could all eat healthy. We could take brisk 30-minute walks every day. There's lots of things that we could do that would make us better overall, better mechanically. And we don't do them. The vast majority of society doesn't do these really simple things that would improve them. This is no different. This is the same problem. So another way I always talk about compound interest of founding. There are so many things you can do every single day that separates you on that curve I talked about before. Sending one or two extra emails, reading one or two extra articles, doing one or two things that otherwise the next person isn't doing. Those will separate you. Anyways, next slide, Joe. Let's go ahead and move, or Joseph, let's go ahead and move along. So I talked already. I'm not going to spend, these are some of the items that we're going to talk about: teams, culture, products, so on. These are the complex systems that these experts are trying to get their hands around. Today, we're going to spend most time on teams, culture, Well, there's another section we'll do at a later date, I think, on product. Product is one of my favorite areas to talk about, but it by itself takes a ridiculous amount of time. Sales and support are two areas, in my personal opinion, that you don't just write copious notes on or do a book or a lecture series. You really have to get in the trenches with the team and work with them directly. Do the types of work that Joe does, for example. This isn't the and that we do. This isn't the kind of thing that you can do just sitting over lunch, a vegan lunch, as it was said earlier. This isn't something yeah, you're eating a salad. You can't just eat a salad and figure that stuff out. But we're going to talk about the first two today. So let's roll. Okay. I actually didn't, I don't realize that I put this in. Okay. So here's some more basic concepts. So I'll frame everything we're going to talk about. Starting off, I came out of data science. So that's part of framing my approach as an expert. So, and it's actually the reason Joe and Bonnie and I all get along so well is that I look at data to drive every decision that I make. That's true in my founding. That's true in my investing. And it also means that I question everything. It means I question the raw inputs to the data. Is it clean? Is it dirty? Is it useful? I question experts, as you just saw a minute ago, and I question in a big way groupthink. And we'll talk just briefly about this, but be very, very careful about that last one. It's a big deal. It's the main reason that I left. I started out in Silicon Valley, no offense to anybody there, but I left because there was too much thought being driven by people who went to the same schools, worked at the same places, belonged to the same clubs, ultimately as they grew, hung out at the same bars. There was a serious decline in the diversity of thought. And I bring it up here because as you're building your team, you want diversity of thought. You want people that look different than you, that worked at different places than you, that, basically had a different upbringing than you, that understand other cultural values than you do. Anything you can think about that brings along diversity of thought, you want, because it will bring that flexibility we talked about earlier. It'll bring that you want your ideas to be challenged. Exactly what's not happening in tribal America right now around politics. Neither side, everybody's kind of rooted in. You want your notions to be challenged in business, otherwise they'll fail. And so these are the kinds of things that I'm very, very focused on myself. ABC, always be closing. That's a mantra you hear companies. By the way, should I pause there, Joe, Bonnie? Anything you guys want to add on that top part? I know you've got.
Joseph's
I
got his hand up.
have a question.
I was gonna ask if anybody has any questions. Go
Yeah,
ahead.
I have a question / comment. How do you balance diversity of thought with industry knowledge and expertise, right? A lot of companies like, I want someone who has 20 years experience in, X.
Yeah, I would say, okay, that's a great question. We're going to touch a little bit later on this. Early in your development of your startup, and I'm going to just go ahead and jump ahead a little bit. Early in the development of your startup, you want renaissance. You need people that can do lots of things because you're going to have lots of things that need doing. I'm not suggesting you don't need skills. I will tell you can train about 15 to 20% of the skills needed to do a job. So you can bring in, and I'll talk about the trait that you really need more than anything else in hiring, and it's not skill. I'll get to that a little bit later. But what I would say is that when you're building an early team, you need a lot of those Renaissance players. It is going to create a later problem. You're going to have to let people go that are very near and dear and valuable to you at some point. But you start to diversify that's the wrong word. I don't want you to reuse it. You start to move and evolve into the need for really specialized skills as you do your A round, as you do your B round. But in the beginning, you need a small team that's nimble that can do a lot of different things. So I think I don't want to downplay it. If you can get somebody who's an incredible talent, has a really unique skill to your business, I'm not going to say don't go after that person, but I'm going to say I would not prioritize that in my early team. I'm going to prioritize, I'll just say what it is. The most important thing is attitude, period. We're going to talk about building culture. Culture is the single most, it's like not just a buzzword, neither is vision. It's the single most important thing in building your startup. It's like an armor that you put around your startup. and it has very little to do with skill. It has everything to do with attitude. So that's where when we get to the hiring part here, I'm going to talk about that, because that is the one thing any founder can do. Takes almost no effort. It's just becomes a core ethos of the business and starts to become, it's your immune system is what it is.
I've said that to a lot of people in my career. Is like, I can teach the skills to do the job. I can't teach the attitude to do the work.
Absolutely.
Well,
Absolutely.
That's a
So
good one.
And let me interject there, because again, in my real world example, I keep coming back to my career because I've studied my prior career in an analytical sort of case study framework, because the money management world, where we did the investment management, we did the securities analysis. We didn't talk to Wall Street. We didn't talk to the management. We had to make the decisions ourselves, and how we manage money in separate accounts for our wealthy clients. They saw everything we did. They saw every decision we made on behalf of them and using their money. So there's an accountability and transparency feedback loop that was immediate, and it's spending somebody else's money. And I got to the point where I wouldn't hire MBAs. I wouldn't hire people that had a CFA, because they became embedded in a rigid thought process. I wanted what is euphemistically called utility infielders, that were curious, that had a work ethic, that didn't think they knew the answers. They weren't trying to validate their prior education they paid a lot of money for. They were coachable, and they would listen. And just as Joseph said, I could train them on how I wanted to apply that frame of mind. That wasn't hard, because we did have a very structured research process. But when that construct of that process, I wanted the diversity of thought. We had a team of 3 people. I wasn't the final decision maker. I architected the process, but all 3 of us worked the process. But the people involved had to have this thing that Glenn is talking about. And we ultimately were able to deliver phenomenal results for a very long period of time. And most importantly, spent very little time making decisions. This is a really important point. It was like fast break basketball.
Yep.
What we were doing, we would move up and down that intellectual court, making decisions, passing the ball of decision-making off to each other. And ultimately, the outcomes were we won, as it was reflected in the performance we delivered for our clients over a long period of time. So that cultural thing is really important, and spotting people that aren't intellectually rigid for whatever reason, ego, arrogance, a lot of fancy letters on their business card, right? These are things that are really, really, really important. And again, that laboratory of money management was so instructional on so many things, because it was both, we had a process, but inside that process, it was like intellectual fast break basketball. No, it wasn't set plays where somebody was the point guard. We were dishing the ball. Everybody was doing everything. And I learned something from Ross Perot when I was on Ross Perot's campaign. In how he ran his companies, he extracted from the special forces. They had teams of 3 on everything. Teams of 3. And all 3 of them were cross-trained on all of the things. Now, there might have been a singular person on that team of 3 that was the first line of decision-making and responsibility. But if they were gone, if they were unavailable for whatever reason, the other 2 people could pick up the slack in nothing flat. So having very small, nimble decision-making teams is also really important, and you need to limit your time window of decision-making to a narrow window of time. Don't let analysis paralysis get in the way. This is a cultural component that's absolutely critical.
You know, I know,
decisive. Go ahead, Bonnie.
I know that this might sound ridiculous, but I can't tell you how many startups I've worked with. You have to make sure that you really are a team. Everybody's on the same page, even though you have different opinions and you discuss them. And what I can't tell you how many times there was somebody on the team who undermined the company. So be careful. Oh, absolutely. That's important to pay attention.
Yep. And you've got to learn how to spot those people ahead of time before you bring them on. And as they say, hire slow and fire fast. The reason is for what Bonnie just said. Understand. This is what I know. Eric is just seething here, because he could do, I mean, this is what his product does. This it solves everything we're talking about. So I know he's.
I mean, yes, and I want to be respectful of everybody, but this is what I've dedicated 6 years, and I'm an expert in. But everybody gets culture wrong, gets all these things wrong.
Yep.
Every
beware of the experts.
Beware of the
Yeah.
experts. Absolutely.
I-
And by the way, Eric, there's things I'm excited to see what I can learn, because you should always be consuming. Okay, I've got to always be closing here, but you should always be consuming information. So I'm always trying to learn as well. So this will be fun for me. After the fact, we should connect and talk about it.
Yeah, absolutely. Thank you.
So here, by the way, Joe, we're going to talk more about decisiveness. It's another incredibly, like, one of the top 3, 4 things that you have to have in a startup. It goes right with bullet 3 here, which I put innovating. I should have put iterating. One of the things that a startup can do is they can just move faster than their competition. And you should always be iterating, moving, like test, lather, rinse, repeat, put it out there, test, get feedback loops, build on that, and go back to the lab and relaunch, but do it decisively, do it with purpose, and do it quickly when you can. Obviously, it's sort of like perfect is the enemy of the good, old, buzzword crap, but there's truth in there. You want to be careful about that. Bullet 2, all I was trying to do here, I'm not going to waste time on that, but a lot of times people talk about always be closing. They're talking about their sales team. They focus on that. That is true for as a founder. You should always be everywhere you go. You're like, apologies for anybody who was in multi-level marketing, but you're in multi-level marketing now. Everywhere you go, you should be pitching either that Mary Kay or that Amway or whatever it is. You're evangelizing, you're pitching, you're recruiting. You are 100% on. That's why one of the reasons burnout is so high. You're always on. There are a small select handful of people in your near-term, direct orbit where you can let your hair down and be yourself, but otherwise you are always closing in all environments. And that's what it takes. Unfortunately, that's what it takes. The last bullet.
I want to
Sorry,
say I have a funny story about that, where I was working with a company and, they were invited to pitch, and it was this event where it was all investors, angel, blah, 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 VCs. And he was pitching, and he just got so burned out. He just decided to take a break, have a beer, fine, goes to the men's room. He said, and there's a guy in the stall next to me, and he said, why aren't you out there pitching? He said, I'm just so burned out. He said, no, so what are you working on? That was his first check.
You're right.
Oh, it was his first check.
Yeah.
Good old urinal check. You
Yeah.
never we all got one of those.
That's why more men than women get funded, because they stand up to pee.
That's right.
Oh my gosh.
Yeah.
If only that were true.
They're married and they have 3 cats.
As long as you
There it
didn't
goes.
piss away the money.
Oh, da-da-da.
Does it help if you throw a compliment to the guy next to you?
Oh, he was a little bit tipsy at that, but he just did a straight piss. That worked.
Oh my gosh. The last bullet on this slide is actually the most important to me at this stage in my career. I've realized it's not the most important thing in building your business. It's the most important thing personally. Think about this as if you're going to write a book about it later. Is it something you can be proud of? Is it something that can you feel good about what you've built in all aspects, whether it be its impact on the world or the way that it treated employees or the way that it treated your own psyche, whatever it is. Like, can you feel good about this journey? Did you handle it in a way? Would you have felt good as a child? Like, if old you could come and talk to young you and tell the story, would you feel good about telling that story to young you? That's kind of the way I've attacked all this all the time. Next. I really don't want to spend much time. I just want to use it as an example of, again, sort of some of this, some of the advice that's out there that may be right, maybe it's wrong. There are aspects of it that are on point, and to take an opportunity to point out a resource that you guys can use. So Startup Genome Report is a report that I've long told founders and investors they should all be looking at. They do what I call a murder book every year, where they look at the death of, they look at about 5,000 or more startups that lived or died, mostly died during the course of the year. And they look at what it was that caused their demise. And they try and break it down. And so through that process, they look at a lot of these key elements that maybe had an impact. And one of the things they look at, for example, is how many founders are in the startup. and whether founder, a company that started with one founder will do better than two, and so on. The way that works, just at a high level, is 2 founders do better than 1, 3 does better than 2, 4 starts to plateau, 5 falls off a cliff, 6 is catastrophic, and so on. So what can you derive from that? There's lots of random things you can get, but basically, as they dug into that and look at it, it comes down to flexibility. So if you've got one founder, they're inflexible in thought. They are dictatorial, think they know all the answers, don't listen to other people. When you get 2, they start to, and it's not a perfect rule, I'm just giving you some broad brush strokes, but you get to 2, they start to, riff off each other. They can take some of the load, some of those things. And when you get to 3 and so on and so forth, the part of the myth around all this is it's not necessarily just founders, it's founding teams. So let's go down one. So I mentioned this, if you have more senior level people, so I'm going to remove the word founders and I'm going to say if you have a senior team, core team, founding team, there from the beginning, totally invested in the deal, then there's basically a lot of help with the work that has to be done. The other thing is you look at each other, you're in a foxhole together, and there is something to that. You don't want to let each other down. You don't want to fall asleep on your watch. You don't want to miss your assignment. That is a meaningful thing. So having partners, having core team members matters. I mean, obvious, right? It's obvious. But again, why, if it's so obvious, do so many people fail? And that's, again, the flexibility. I talked about that before. That's the main thing there. Before I move on, Joe, Bonnie, anything you want to touch there at all?
If anybody has any questions.
We
Okay.
are going pretty fast here. Does anybody else in the room have any thoughts or questions or case studies you want to throw out there just to contribute to the content?
No, I had one, but I'll wait till the end because it goes back to one of the things that Glenn said in the beginning.
Oh,
So
up to you.
Well, we're going to cut it off here and then open it to questions, Bonnie, just to make sure. Just try and keep me honest, Joseph, on the time. We want to add probably 30 minutes or so. So it's going to be tight, right? Whatever we do, we're going to cut it off and do another session. But
we have
let's talk
35 minutes or so until
2 weeks.
Okay, so let's talk about culture real quick, because this is one of the things I absolutely want to make sure people get before we bail and that we get into at some level. So this is something that Joe and Bonnie and I have talked about in many different sessions individually, not necessarily in front of a lot of founders, but many years ago, VCs, I don't know which idiot did this, but it started becoming a trend that VCs were telling founders they didn't need a business plan. I don't know what idiot or what business school, what idiocy in a business, I don't know where that came from. That's the dumbest thing I've heard, probably single dumbest thing I've heard come out of the venture world. The business plan is not for me as a VC. It's for you as a founder. And it is a very real document. It's not a bunch of buzzwords. One of the biggest problems is that the biz plan forces you to think about your vision, another word that people don't take seriously. And I want you to take it very seriously. Your vision is the entirety, in many ways, of your business. It's not an item on a checklist. It's really core. It drives buy-in. Okay, that's how this culture is going to come about. Basically, it makes it much easier to hire. So good employees, let's start at the top. Good employees have options, lots of options. I have nothing against any job anywhere, but you're not hiring people that work at Walmart or McDonald's, or maybe they do, but by and large, you're going to be hiring people that 10 other people are trying to hire at the same time in a probably more technical arena. Okay. Again, I grew up on a farm. I have nothing against any job. I'm all for hard working, but that's not necessarily, you're not going after people who are currently on the dairy farm. That's just not what's happening here. So those employees have choices. They need to buy into what you're doing or they won't come on over. Okay. And it also, having a core vision helps in self-selection. So I'll try and give an example at a high level. I had 2 companies that I use that are very different. One was an ad tech company. One was a clean energy company. The ad tech company, we literally called our salespeople hunter killers. and they were feared in the marketplace. And we were brutal, all athletes, all military. It was a brutally aggressive team, and it's self-selected. And the vision of the business was designed with that kind of ethos behind it. And people wanted to come work in that environment. It'd be like going to work, taking a gig at the Baltimore Ravens or the Chicago Bears when they were feared, when they were feared teams in the NFL, versus going to the 49ers, who were known as a very friendly, very successful, but a much different type of organization.
White wine sipping, they were accused.
Yeah, exactly. There was something to it. The clean energy company was almost like a drum circle singing Kumbaya. It was a very different ethos, and it's self-selected. Well, that was driven at the vision that started with the vision of the company. Your vision is your North Star. You should always, and that's also why you need a business plan. You should be 6 months in, a year and a half in, looking back. Are we still on our North Star? Are we doing the things we talked about in the biz plan? By the way, it's a living document. Should we be changing that biz plan, elements of it, based on what we've learned now? But the vision isn't just some nonsense blurb that you stick in the business plan. It is the core that you're going to now build on to select to hire, which is really where culture comes from. But you're going to use vision to drive the kind of people that want to join you. They have more, by the way, little do you realize, probably as a person hiring, the people you're hiring have more to do with getting hired than you do. Like you may hire them, but they're the ones who are coming through the door. So they're handling the selection process, whether you use a recruiter, whether you use a website, whether you use referrals, whether you just put a note in the paper. The people coming in the door have more control over that situation than you do. And their decision is tied to your vision. And that's why it's ridiculously important. The other reason it's ridiculously important is because I mentioned ABC. All of these people you hire become evangelists and salespeople in your business, no matter what department they're in. The biggest government contracts I ever closed, and I closed the largest one in history at the time that it closed. That contract was closed by an engineer in middle management talking with another engineer in middle management at Northrop. That would never have happened if they were not an evangelist and salesperson as good as my best salesperson. And that came about because they bought into the vision. They believed in what we were doing. They thought they were doing something that was good for the country. And that all played into that mindset. So it's a core foundation that everything else hangs on next. And I'll pause there, and then we'll talk just really, really briefly about being consistent about how we manage it. But anybody want to chime in on any of that?
Yeah, I have a thought on that. Every time I get involved with a company, like I'm all in, right? Like I bring my family along. Everyone's like, why your family liking everything you do for your company? So I think it's an interesting, what you shared is interesting. I guess my question is, how do you filter for that? How do you identify those skills, those qualities in a potential hire? Or how do you get them motivated to do that? Like I know I'm self-motivated to make sure wherever I'm working is a winning team. But how do you get someone who we've all worked on teams where there's winners and there's losers, right? It's just natural. So just curious.
Well, it's funny what you said, Joseph. So you mentioned family, so this gets a little more complicated. Joe said something earlier that's so ridiculously important, and it's in this deck. We won't get to it, but it's in this deck. We'll get to it next time. But hire slow, fire fast, right? Iterate. I mentioned you want to iterate as a company, right? They're the same thing. You should be doing, like, you're really good if you're a startup, you're probably really good at iterating product. You should be really good at iterating people. It may sound brutal. I don't give a crap. I tell my founders never to confuse your business with your kids or your pets but treat it like a living organism. You'll treat it differently. If you had a dog walker and you even thought that they might have kicked your dog, I'm going to bet they're not walking your dog next week. That's how this is. So to answer your question, the easiest way to do it is to iterate the people. Like, you won't know. I could give you some snappy expert advice on how to hire properly and find the right. And then there are literally people like Eric who can figure out a lot more. But for the vast majority of startup founders, they're not going to know, and they're going to get it wrong. But what they won't get wrong is firing their ass. And do it fast. I was joking. It's
I know you
horrible
say do
joke.
it fast, and I know every startup says hire fast, hire fast, fire fast. It doesn't always happen though, because they're afraid to fire.
Well,
There's emotion. It's an
then they're going to
emotional.
fail.
Yeah,
They're going to, I'll be brutal about it.
I'm
You're
with
gonna
you.
fail.
I've had to fire people at startups, and if you fire them professionally and respectfully, you can still have a relationship afterwards, and they'll be better off, and you'll be better off in the end.
Always.
Yeah. And you're going to feel, okay, there's so many problems with the bad hire. And again, I've got a whole section on this, but because we're not going to get to it all, just to give a little bit of example, you've got one first of all, I've fired people on day one. I mean, let me take a couple cracks at this. First of all, never outsource you can outsource to some other people to be involved, but the CEO, the founder, has to meet every single person before they're hired in an early stage company, pre-seed, seed, right up into I would argue. They should meet every single person because, again, they have to buy into the vision. They have to share it. They have to deliver it. They have to evangelize it. If they don't have that buy-in, then do not hire them. And you should be the one making that call. And if there are multiple co-founders, as crazy as it sounds, I always believe there's one person that really drives the engine. But as crazy as it sounds, those co-founders should all have some voice in that process. And it will get ugly and it'll get complicated, but there's reason for that. They're going to drive the culture in the business, and they're going to be around when you aren't. And so you really want to be careful about that. So that's the first thing. You should be involved in it. The second thing, as I mentioned, I fired them on day one. That's because of attitude. I don't fire somebody because they don't have the skills or they get something wrong that's not a very good reason. I fired somebody because somehow or another we got the attitude component wrong, and we saw that the vision fit was off. And I don't care if they're an intern, if they're underpaid, if we spent 6 months looking for them, if we paid a recruiter to find them. I don't care about any of that crap. They're fired the second I think they might be the wrong fit. Not a month later after I've analyzed whether they're the wrong fit. The moment it entered my mind, and I think that they're the wrong fit, they're the wrong fit. That's that instinct that startups, well, it's a startup superpower. I don't know if I've even covered it yet, but your gut got you to this point. You didn't have money. You didn't have expertise. You didn't have experience. So what was it that made you successful to get in front of a venture capitalist to raise money if you're in your first or second startup? It was instincts. And so listen to them. There's something to it. There's a great book called The Gift of Fear. It was written by a FBI profiler that talks about serial killers and their victims and how they come to be. And it largely comes down to how your instincts are not random. They are a very specifically honed mechanism that we all have. Listen to them. The moment you see somebody who's a problem, get rid of them. So if you can't do that, don't do this. That would be the first thing. Iterate and roll them over. So to answer your question, I don't know if you can naturally, there are some people out there who can, but most founders can't find the perfect people every time. And so roll them over, iterate them quickly. That's what I would say to do there. Boy, I covered a lot of different things that I cover elsewhere and later and so on. So apologies for that.
You have some questions.
Oh, yeah, you want to open up the questions.
Scott's got a question. Eric's got a question.
Although I have a funny little side story about, vision and you're not hiring people who worked at McDonald's. Is that I knew this founder had a very successful exit. 9/11 came along and he was very stressed out about the whole thing. And he did want to start another company, but he couldn't focus on it. So he took a job at McDonald's.
I've often thought I'd go work at Home Depot.
Oh my God. So he is at McDonald's, working, taking orders and blah, blah, blah. And people are talking, blah, blah, blah. And that's how Scott Hefferman got the idea for Meetup. You realize
Oh
people
my gosh,
want
how funny, how
absolutely.
funny.
Yep.
That's fantastic.
So anyway, questions. I'm sorry.
Who's first?
Scott and Eric.
I'll go right now. My question has to do, what I was thinking about earlier, maybe talking about it later, but say we get our a big funding round and we get a lot of money, and obviously we want to use most of it for the technology and the programming. But that brings us to the point where maybe we want to hire some people. Like currently, right now, I'm the CFO, but I guess my question was, if we get to that point, we have money changing hands, moving around. Do we fire me and hire a CPA or someone who has a lot of experience dealing with all this, or do I stay on board doing it and try to learn the things that I don't know?
And so you're playing the role, you're serving the role of CFO in the company, but you're also are you the strategic founder that came up with the idea, drove the vision, as it were?
No. Our founder Tom came up with the idea, and
Okay.
then he started
Okay,
working
so
with things. But I've been treasurer on several boards and things like that. So basic accounting, but high level where if, we got $1 million or something coming in, and how we move it around. I don't have a lot of experience with
okay.
that. I think I could learn it, but
I think I got a good foundation for where you're coming from. In another section, in another day, I talk about the worst day in the life of a company. And I think I know what it is for every company without even knowing the company. I know that's an arrogant thing to say, but it's just through thousands of these, I've seen it. And it's the day that you have to lose really loyal people that have been with you from the beginning. So I talk about hiring Renaissance people and people with a broad skill set, maybe not deep, maybe wide, not deep. Okay. And these people tend to buy into that vision and they come along early, but because they came along early, that's where you were as a business and you could pay a certain amount. And, the A round, B round, C round people that are working at those companies are making more money, came from bigger backgrounds, all those different things. Eventually, you are going to need to hire those specialists. You are going to need to hire, and you'll have enough of this immune system built in your business with buy-in around the culture and the vision and all of that. And again, I apologize, we're not going to get as deep into culture as I really wanted to today, but you're going to have this organism that is actually really resilient. And that's usually at around 20 to 21 people. It is a very, very robust core. And by the way, that's about where your micromanagement falls off. You can micromanage up to about 21 people pretty easily, but it starts getting a lot more complicated. So at about somewhere around 20 people, you start to need to hire. You're going to raise, if you're successful, you're going to raise more money. You're going to need to deploy and scale. It all tends to happen at around the same time. This again is from a lot of lather, rinse, repeat for myself, but somewhere around 20 people, and I've seen a lot of research on this as well. Somewhere around 20 people, you're going to start adding that. You're going to start adding specialists. And that's going to be a very difficult moment, or start to become a very difficult moment in the life of the company, because you're going to have to let go some people who have shown a lot of loyalty, been there with you, were there in the hard times, missed payrolls, all that stuff that really matters. But that's going to happen. That's part of this journey. It's part of writing that journey. I talked about writing that story, is how you manage through those really shitty moments. And they happen even in the best companies. So to answer your question, I suspect, I can't say if it's going to be you or somebody else in the organization, but I can say that some of the people who maybe have a breadth but not depth in a particular area are going to be ones that are susceptible to replacement. They're going to have been there from the beginning or close. And you're going to look to, but again, be very careful with that. Don't just take somebody who's got this incredible, they went to this or this and got their MBA, their Wharton, they've got their, they worked at this huge company with this big label behind it or whatever. Don't just buy into that nonsense. Again, they still have to fit as best you can. You still want them to buy into the vision, fit with the team, and be additive to the culture, not a stage 4 cancer that you bring into the business. Okay. So, and you certainly don't want to bring bad habits from place else either. So that's, a lot to cover there, but trying to avoid being that 15-minute expert. on
Yeah.
that kind
Well,
of question.
Yeah, I'm just thinking that, what I don't know, I probably could learn, but at this point, do I want to do that or
Well, that's a different question.
yeah.
There's another model that is there's people I've known that have started and run several companies at the same time, right? And the reason they were able to do that is they say, look, you don't need a lot of people to run a company. You need contract players, people filling very outsourced specific tasks. And that, to me, keeping the book straight is one thing. Now, actually understanding your financials and understanding the financial drivers, that's something we were going to talk about in the next one, right? And that's going to be some of the content of what are the absolute metrics that are ubiquitous to any company, large or small, on what are the relevant financial metrics. Now, you'd be shocked at how few people that run big corporations, CFOs, understand this. I did a presentation about 350 CFOs of public companies from around the world on this very thing out at the Del Coronado down in San Diego a number of years ago. CFO Magazine, which is part of the Economist publications, had their annual global meeting. And I was asked to speak on these topics to that audience. And again, you'd be shocked at how many really fancy people really understand it. So again, there's two different functions. One is just getting the goddamn books done right, timely, and straight under basic GAAP accounting, chart of accounts. And that you outsource. But understanding the actual levers of what's the financial information going to tell you and how do you use it almost at a management level, that's a whole other concept.
So in a way, it almost sounds like the basic bookkeeping stuff, which is really pretty much what I'm mostly doing now because, we're not pulling in revenue, outsource that and concentrate myself on the other things that you were just talking about.
If you put any value on your own time, you're going to find somebody with more expertise and cost less time per hour than what you probably value your own time.
Okay.
That's just a simple function because that's not that complex. Most startups in this earliest stages, it's not that complex. Knowing what to look for and knowing from a management level, okay, what are the value drivers? What are the things we need to focus on? Which part of but this goes back to the business plan that Glenn was talking about. You need to have a vision of that business plan, which includes understanding the actual financial metrics that matter.
Okay.
And I'm talking at high level, not that short-term bullshit that's largely SaaS-driven KPIs that so many people now banter around as ubiquitous KPIs. Those are largely specific to the SaaS business model anyway, and that's going by the wayside. So.
Eric, you had a hand up also.
Sure. I find this whole meeting conversation fascinating. I mean, I wish this were like 6 hours long. But one thing that I want to,
I'm just convincing it.
It's over 10, well over 10 actually. So
well, 6 hours long if and then we can throw in QSBS and Bill Mason in there too.
That's late. That's next time. That's next time.
But the one thing that I wanted to that the most important thing that you said that resonated with me, Glenn, is this imposter syndrome. And Milam is number 6 startup for me, and this is something that I didn't learn until startup number 3. And you talked about being authentic, okay? Being authentic is a behavior, and the result of that is trust. And I can't tell you how many times in the early days that when I was speaking with potential investors, they would suggest that I take the company into X direction. Oh, that's a great idea, and then you start reworking your pro forma, and you just vacillate from one guardrail to the next. Everybody, you started this company because you had a vision for it, and then you're throwing all that away for chasing money, and they'll suggest all kinds of things. You should do this, you should do that. And I think that I killed off more investors by vacillating. Maybe it was a test, to see whether I was grounded and founded in my vision. But going from one guardrail to the next, depending on what investor you're speaking with, was always a recipe for disaster. but that also that being authentic and that trust is very important on the inside for your people and building teams. And unless you have that people trust you and you're authentic, I don't care what vision you have, they'll never buy into it, you know? So that's one of those foundational things. And it goes back to what we've all heard as, younger and all that. You know what you know and you know what you don't know, and just be honest about both of those. So it's simple and it's true. The only other thing that I wanted to mention, there's a book. Nobody talks about this, but it's a great book for entrepreneurs. It's called The Messy Middle.
Oh,
It's that part that you're talking about after you've founded the company, you've maybe got capital, and it's what's in between there and exit. And it's a really good read and all. But Glenn and Joe and Bonnie, I can't thank you enough. But yeah, if I can share anything, being authentic will save you a lot of headache, trouble, and disappointment down the road.
Yeah, and then that authenticity, that at night staring at the ceiling while you're sitting in bed before you fall asleep, that goes back to vision as well. If the vision is important to you and you believe in it at a core, you're far more likely to be successful than if you've got an inauthentic vision that you just pulled out of air to make money. I'm just going to tell you that there's a map between those two. There's a balance between finding a vision that is important to you and you believe in, and that the market needs. There's a map to that can drive you to success. And if that's your North Star, the rest of this gets really easy, because again, if you're authentic to your vision, you're going to be truthful and honest and transparent to your employees, because you're always going to be authentically focused on something that was important to you. If you're passionate about it, I don't like that word. I mean, it's an important word, but I think it's bantered about and used improperly.
Diluted.
But if it's just part of the driving fiber behind what you do every day. By the way, there's another piece to this. Everything is the same. It's like these 7 habits of successful people type of deal. Everything is the same. It's incremental, small little things that make the difference, and they're all the same little things applied different ways. If you come into work, and I'll talk about it in another section, another day, another time, but if you come into work and you ask about a particular metric every morning, it's the first thing you ask about. And every meeting you walk into, it's the first thing you ask about. You will change behavior in the business. The company will focus on what the CEO obsesses over. So for me, it was always churn, because it's way more efficient. It's capitally efficient to keep people rather than to try and find a new customer. So for me, it was churn. I would come in, the first thing I'd say, how are our numbers? How are our loyalty numbers yesterday? What'd we lose? What'd we chafe off yesterday? I would always ask that question and I did a lot of turnarounds as well. And within 2 months on the job, I didn't have to ask those questions anymore. I come in the morning, the report's ready. They come into a meeting, the first thing they talk about is churn. Like, the entire shift of the business happens, and I did nothing in policy to make it happen. I just started focusing on that thing and it's the same. It's the same as vision, right? It's like I took vision and I got more granular and I made it churn as it tied to my vision, but it's still the same thing. What's the North Star? What's the CEO or the founder focused on, and how can you drive to it? It's funny how all these little things make the difference.
It also ties to your earlier point about data.
Oh, for sure. And feedback loops.
Feedback.
Oh my gosh, which we're also not going to have time for. Apologies. This is a ridiculously large, this is a full university lecture series. This is a lot to cover. And so we're just hitting the tip of the iceberg. If we have time for one more slide and we can take questions as well, I'd just like to mention this quickly, because we're not going to have time to go through all culture, but I want to mention why culture is so hard, so insanely important. Again, why is vision important? Because it drives culture. You're trying to get to culture. Culture is your white blood cell count. It's your immune system. culture is going to happen, good or bad. It's going to happen whether you whether you want it to or not. So you may as well, and there's not even may as well. I don't want to treat this passively. You must create an environment that fosters a good culture. The strategy is driven by management. Culture lives within the team. Think of it like this. Strategy is exactly what you want to do, like how to do something and get to a specific objective. Culture tends to be how we do things here. It's more of that permeates the fabric of the team, and it's sort of the ethos of the team. And what ends up happening is a lot of times managers aren't on site, and something will come up that doesn't fit squarely within a box, and nobody knows exactly how to do it. And if you rely entirely on strategy and nobody that handles that strategy is available in that second, everything defaults back to culture. The vast majority of decisions, small decisions in a company, not the ones necessarily the founder is making, but a vast majority of the little day-to-day things that are happening are culture, not strategy. You wrote out the most detailed strategy you could. It had 48 points in it. Unfortunately, there's 5,000.
Oh, shoot, you froze.
We lost him.
Yeah, I know. I was hoping it wasn't me. I was about to shut off my video. Uh-oh.
While he's frozen, let me reiterate his point. My last firm was the money management firm, and I went through and I executed so many of the things we're talking about here.
So it's 5,030.
Hold 1 second, Glenn. You froze on all of us.
Yeah, you froze on us.
I started injecting here just
no, go ahead. Go ahead.
Point. But my old firm was in Northern California outside Sacramento, and I've been gone 10 years, and they still get together regularly just because of the team was so tight and the relationships, the respect. They still get together and they send me notes on saying, Joe, you coming to California? We're getting together again. And that is one of the single greatest legacies of that firm that I'm most proud of, because it is literally the historical manifestation of culture and the teamwork. And we had 3 rules. One is clients come first. Now in the service business, of course, that's trite, right? But how you execute that and how quickly everybody understood that and how important that was. For example, when anybody would come into our office, even though I founded the firm and I architected it and blah, blah, I was the owner, blah, blah, blah. Every time a vendor, a meeting that was meeting with me, a client, everybody got up out of their desk and walked up in. There's 6 of us, walked up in and said hello, introduced themselves, what they do inside the firm. Everybody, as soon as somebody walked in. Second, don't fight the model. Now, again, what I found is, particularly when you're managing money, particularly with the male ego, is everybody wants to inject their own ego. We had a rigid process that people had to operate within the construct of, and it was very specific. But if you fight the model, you literally had 3 strikes and you're out. First strike is, okay, it's a shot across the bow. And they were gone. We would fire people that would continually fight the model of the business itself. It was a way to, again, very specific. It was very clear. Everybody knew it. And then the third one was Joe has fun, right? In a service business, that esprit de corps has to have that human element. And we made sure Friday afternoons we had wine, and we had people would come by and we had wine tasting, because I had history in the wine industry. We always made sure there was a culture of balance, if you will, and human element. The families could bring your kids in if you need to bring your dog in, all that sort of stuff. So these are all the cultural elements, but we codified them in 3 different things, and everybody understood those things. And again, the evidence is they're still getting together because that was so ingrained and executed upon.
Anyway. You know, you said something earlier, Joe, about, you mentioned fast break, and you kind of mentioned teams and decision making. And I'm kind of, as you were talking there, I was thinking to myself that, so when we talk about culture versus strategy, culture is a fast break, strategy is a set offense.
That's correct.
Okay, so and if you think about it, imagine a basketball game where 80% of it was fast break and 20% of it was set offense. You've got this amazing chaotic opportunity that lives in the 80%, and that's going to rely on your culture. So you better get it right. And obviously you did. The fact that team's coming back together, that's
I know.
pretty hilarious.
It
I
really
love
is something. I said it breaks my heart. I can't fly out for it, but it was really, really, really important. And
But you wrote a book you can be proud of.
that's a whole other topic, buddy. That's a whole.
I'm
nother
just saying,
topic.
it's like when I was saying earlier, write a book you can be proud of. You wrote a book you can be proud of.
Just another data point on that is that there's folks inside Credit Suisse bought the data vendor I used, and there's people still talking about unique insights our team found in their data they didn't even know they had. And again, it all came back down to establishing that culture and that environment and giving people the latitude to think, yes. I told them, I said, look, I want you to make mistakes. Because if you're not making mistakes, you're not trying hard enough. You're in a comfort zone. You're wanting to stay in a comfort zone. So you have to make mistakes. Otherwise, I'm going to be on your ass. But if you make the mistake twice, that's a problem. And the third time, you're fired because you're also not learning from what those efforts are teaching you. That's the iteration process, if you will. So like I said, these are just some of the mechanics of how we manifested the things we're talking about here. And again, it was always a small team. I knew I didn't have the ability to manage a large organization. Glenn clearly does. So I had to play to my own strengths because I always said I was the player coach. I was on the field and I was going to work harder than anybody else. I wasn't the manager. But we set a culture in a team that literally was like a SWAT team, that it didn't matter who was doing what. Yeah, people had their specific remember, teams of 3. And you had your singular points of responsibility and everybody else would follow that, but anybody else could pick up the slack if that person wasn't responsible for that. And the other people on the team would be responsible for some other component that had a material impact on everybody else's success. So you had to trust their leadership in the areas of which they were responsible. And that means having these folks that have this mindset that Glenn has been talking about. So it really is, there's a lot to be learned from the special forces because, and again, this is something that it sounds really silly, but the closest thing I found to what we did was the special forces. Because what they did was life and death. That is as acute as it gets. But in managing money and the way we manage money, it wasn't life or death. But because the immediate feedback loop of transparency, when you're managing somebody else, and we had all their money, by the way, we had all their money. We just didn't have a small piece. In a family office, we had all their liquid assets. And they saw every single thing we did. There's an accountability feedback loop there that trains you that you literally have an emotional journey you have to manage. You have to have the conviction of your process, the conviction of your training, conviction of your teammates, such that you knew that that process was going to work. And then you had to be willing, when you bought a stock and sold it 2 weeks later and lost 50 grand for somebody, and they call you up and say, why'd you sell that stock? And you lost me 50 grand. You had to have the conviction of your team, your process, and that you executed it with discipline because we had that level of immediate feedback loop of accountability in the eyes of our customers. There's no other industry like it. It's fascinating for me from a case study standpoint on the very things we're talking about.
It's
You could pick any profession, particularly the service industry, whether it's a doctor or a lawyer or an accountant, people you're paying for their expertise and you're trusting them with something that's important to you. And that's has a direct line of sight to your money. Or your health, in the case of doctors, dentists, that sort of stuff. There is no immediate feedback loop like the money management industry, the way that we operated. You could be a lawyer and do something, and whether it was good or bad is never going to unfold for maybe decades later. State plans or whatever else, right? Lawsuits or whatever else. So doctors, same thing. Surgery, yeah. That old adage, the surgery was a success, but the patient died. Oops. That's not a good feedback loop. So anyway, I'm sorry I'm ranting, but this is a real world example of all the things Glenn's talking about. And when we look at why startups fail, this is the first point of failure. And that's why he's spending so much time on it. Success is defined by timing, and a lot of things are out of entrepreneurs' control. It's virtually out of your control because the number one determining
focus
factor
on the
of
things you can.
failure is something you don't know. The future. You're trying to optimize your ability to be successful into an unknowable future. So this is a function of organizational risk management to optimize your probability of success into this unknowable future. And this point of failure is this singular point of failure is so important. You get everything else right, strategy can be right, everything else, and if you have the wrong people around you, it's going to be Machiavellian. You're going to have lawsuits. I'm dealing with one of our startup clients right now in this exact. They brought in the wrong people, and these people went around the management's backs because they weren't getting what they felt they became very Machiavellian, and now there's lawsuits. And the company was screaming.
Certainly.
The company was screaming. It took off. So
yeah, we unfortunately see that, Joe. That happens. I mean, I would equate this to building a house. I'm starting at the foundation.
Yep.
You can argue each step along the way is the most important thing, but it's the most important thing relative to the most important thing that came before it. And the most important thing to start with is vision and biz plan, vision, culture. It goes in that order. You get that right. That is the foundation. That's the concrete base that everything is going to be built on. And then we get into the sticks, and they're not unimportant. They're just a different level. The next level of important.
And this metaphor Glenn's talking about is really, really valuable and important because yes, you're going to build something, but you're also going to be learning. And you might, I got to tear that out and rebuild that piece. So yeah, building that piece properly, but that doesn't mean you can't change course and tear that metaphorical wall out or that room out and redesign the damn architecture. But you can only do that if you have a sound foundation.
You've got a really unique opportunity as a startup founder too. I did some turnarounds. I did some really large turnarounds. And those are, again, using the building analogy, that's like you're going in and doing renovation or retrofit, and you're limited in what your options are. That you can tear it damn near down to the foundation, but you're still limited in your build site and a lot of other things. With a startup, it's like you started with no land, no nothing. You can build wherever you want, however you want. Think of it like there's almost no zoning restrictions. You really have flexibility you lack in those larger companies. That's a huge advantage. Also makes it very difficult, obviously. So I really apologize. I wish we could have got further. I know every time I do this, I know it's going to happen. Hopefully we can cover, there's a ton more. It gets a lot even meatier, more interesting as we go. Hopefully we can revisit Bonnie at some point and go further into this.
Well, we have May 22nd scheduled, so we can continue. Okay. Yes, and I put the link in the chat, and of course it'll be in the newsletter as well.
Oh, we think we got a whole 8 slides into it, right, Joe?
Oh my God.
Yeah, 8 or 9.
Remember, Glenn, we've had conversations together, so I knew this was going to happen.
I knew this was going to happen.
There's too much information.
Yeah.
There's too much information.
Appreciate it. It was great stuff. It was
great stuff. There's great information that needs to be out there. So that's okay that we only got through it.
Okay.
This is professionalizing an important part of our economy now. When it was not as large an impact on our GDP or people's job opportunities or economic vitality in different regions around the country, it was okay for these processes to be done by amateurs, right? People that are learning on the job, if you will.
Well, you could get away with it.
Yeah, you could get away with it. It wasn't nearly as big. The dollars weren't as large. The impact on our economy, the impact on the numbers of lives. The sad part is so little of these very fundamentals are, entrepreneurship is, I would argue, is more professionalizing quicker than the investor side. The investor side is going through massive disruption right now, finally.
I know we're over time, and I think you've already turned off recording, Joe. Is that Joseph?
I can shut it off. Hold on.
It doesn't matter to me. I just know that we're there. I just quickly mentioned, you said something interesting there, Joe, that I hadn't thought about before.